Hello, everyone. Welcome to today's session from Impact Taxation and Financial Services. Today, we want to focus on the high income earners. Okay, if you are paying 47% on your marginal tax, okay, there are 5 reasons you got to engage a tax planner. So, of course, most tax agents don't do tax planning. Yeah, so you need to search around to find a good tax planner, or you can contact us. Yeah, if in case you're not an existing client already. If you are one of our clients, make sure contact us before June 30. Ideally, maybe May or June, earlier June, then that's the timing. We normally do annual tax planning every year. All right, let's have a look at the main 5 reasons. Okay, before we go to the main content, a quick declaration. The information provided is for general guidance only. We recommend consulting a qualified tax advisor or planner before implementing any tax planning strategies. All right, let's have a look at reason number 1. A tax planner identifies deductions, credits, and structures that can significantly reduce the amount of tax you pay legally and ethically. Yeah, if you are one of our clients already, you probably know every year when we prepare your tax return, we have a return template. So in the return template, we'll make sure that every single possible deduction is included in the drop-down list, and then all different return methods, for home office, for cars are compared, and we help you to choose a better one. If you miss one, then the difference could be hundreds or thousands of dollars. Okay, or if you have chosen the wrong method. So that's on the tax return. Of course, there are lot of other strategies, seller sacrifice, concessional super contribution. So the strategies are endless. Okay, if you want to sell a package with your employers as well, yeah, on FBT exempt benefits. So that list is actually quite long. So only an experienced tax planner can identify all those opportunities and then introduce to you to help you to structure your tax, to minimize your tax. Okay. So that's the reason number 1. And the reason number 2, a tax planner can help you to maximize wealth accumulation. So with the right strategies, more of your income can be directed towards investments, retirement, or intergenerational wealth planning rather than going to taxes. This is especially so when your marginal tax is already 47%. So we have done so many restructures for wealthy clients. So sometimes reduce their 47% marginal tax to zero, okay, through a family trust, through different structures, or potentially direct some wealth to self-managed super fund or super, reduced to 15%, and then capital gains tax to 10%. So there are so many different strategies, all right, that potentially you can utilize, all right, to maximize your wealth as well. So reason number 3, structure income and assets efficiently. So strategic use of entities such as trust, companies, or superannuation can protect assets and reduce tax exposure. Asset protection is an important part of it as well, especially if parents want to safely pass assets to their children. Okay, structures such as family trust, through the various structures or distribution, potentially companies to utilize franking credits, aka or superannuation. Superannuation is actually one of the best asset protection strategies as well. So all those structures, or sometimes they can be combined or linked together to form a new structure for our family group, and then that to maximize tax savings and also asset protection. And we can always incorporate asset protection strategies or estate planning strategies to pass down the assets safely and also maximize family wealth as well at the same time. All right. Number 4, avoid costly mistakes. Okay. The reason is because the more you earn, the higher the stakes. A tax planner will help you stay in compliance while avoiding penalties, audits, or missed opportunities. In the past, we did have some occasions when a new client found us. The only reason is because they were audited and then they didn't know what to do. And then what's interesting is quite a few times when clients found us to reject an auditing result, we actually managed to help them to save more, okay, than what they have claimed at the beginning. Most of the time, the tax office audit people because they believe or it looks suspicious that they shouldn't have claimed too much deductions or they have claimed tax refund or there's something that they feel okay they can do an audit and find reasonings to penalize a person. And multiple times we actually found that when tax office audit people, they will only pick on your mistakes, but they wouldn't give you advice on how to maximize deductions. So that's where we come in. And quite a few times we actually increased the client's original claims, okay, increase deductions and maximize refunds, sometimes quite a lot, okay. And then tax office have to accept because we know what type of deductions are legit and can be included. So that's actually where you do need to engage an experienced tax planner who know how to talk to tax office, how to lodge an objection on your behalf. Okay. All right. Also plan for the future. That's the reason number 5. So a well-crafted tax plan considers long-term goals. Okay. So on your retirement, estate planning or business succession, ensuring you're not just saving tax this year, but building lasting financial security. For any clients who have utilized our power planning services, or if you're curious, do a search on our YouTube channel, find out what is a power planning strategy. So that's actually combining financial modeling. It's very similar to financial planning without financial product advice, but help you to plan long term into the future and also incorporate your short term and long term financial goals. In the meantime, to help your family group to minimize tax and also plan to maximize your retirement funding, okay, to help you with estate planning or business succession. So that's all incorporated in our power planning services. What we found sometimes when we look into the next 20, 30 years, quite often we maximize the wealth of our clients multiple folds, sometimes 5 times or 10 times more than if they didn't plan at the beginning. Okay, because if you plan earlier, you know what structures you're minimizing tax and you're reinvesting tax every year on the tax you saved on the investment return. So it can be really powerful in 2030 or many years to come, okay, for the family group. Okay, so plan for the future is really important as well. All right, that's everything I wanted to mention in today's session. Here is a brief introduction about myself and also our contact details here. If you have any questions, let us know. As mentioned earlier, every year we do a tax planning session for high income earners, for business clients. We can actually earlier ones we can start from April and then but the latest probably mid-June so that you can utilize all the deductions or all the strategies before the end of year as of June 30 this financial year. All right, if you're interested on our tax planning sessions, let us know. Thank you. We'll see you in our next session.